Listen up. A 3.11 trillion Korean won liquidation event just fired a structural warning shot at the entire USAI sector. All eyes are now on one critical number, Nasdaq 24,150. That is the line in the sand.
So you see this number, negative 3.22% on the KOSPI, but what does that really mean? Look, this isn't just a bad day in the market. This is what we call a deleveraging event. Think of it as a sudden, massive unwinding of bets, and it's sending tremors right across the globe.
And you have to understand, this wasn't some broad market panic where investors just sold everything. No, this was a calculated, surgical strike. They targeted the absolute heart of the AI supply chain, the electronics sector. They weren't just selling stocks, they were selling the entire narrative of endless AI growth.
To really get what's happening, we need to pop the hood and look at the mechanics of this sell-off. We're about to break down exactly how something like a liquidity vacuum gets created. We call this the triple alignment. It's three powerful forces hitting at the exact same time, creating a perfect storm. It's a domino effect, right? The foreign cash pulls out first. That triggers the automated program selling. And then, seeing the weakness, the short sellers pile on. When these three things happen together, the market's ability to function just, well, it stops. Now, look at these numbers. The foreign cash exit, the 3.11 trillion, that was the spark. The automated program selling, the 1.85 trillion, that was the gasoline poured on the fire. And the aggressive short selling, that was the explosion that magnified the entire move. It's a textbook case of how a sell-off can spiral completely out of control. And the result? Not just a dip, but a total breakdown in price discovery. The market wasn't even trying to figure out what companies were worth anymore. It was just a race for the exits, driven purely by how fast that money was leaving. So here's the crucial point. How does a signal all the way from Seoul translate directly to the US Open? Let's go ahead and connect those dots. This right here is the key connection. SK Hynix isn't just another company. It's a canary in the coal mine for Nvidia. The correlation between them is incredibly high. We're talking rho equals 0.87. That's just a technical way of saying they move in lockstep. So when SK Hynix gets hit this hard, it's a direct warning shot for the entire US chip sector. And here's the bottom line. The demand for these advanced chips is a direct signal of how much companies are willing to spend on AI. This huge sell-off in Korea is basically the market screaming at the top of its lungs, we think that spending is about to slow down. But here's where it gets interesting. Not all the capital fled. You see, the smart money didn't run away. It rotated. And this is the hidden signal that tells us what could be coming next. This chart shows it all so clearly. While a massive 2.85 trillion won was exiting the electronics sector, that capital flowed directly into defensive positions. This wasn't a full-scale retreat. It was a strategic migration. And where did that money go? Into what we call upstream alpha nodes, safer bets like biotech and energy infrastructure. This is a huge clue. It tells us that big investors aren't pulling out of the market entirely. They're just shifting their capital to less risky areas for now. So this creates the core tension we're facing. The AI supply chain is signaling a bear market, but the defensive rotation suggests smart money is just repositioning for the next leg up. That conflict is exactly what our battle plan is designed to solve. Do not trade the headline. Trade the supply chain. Your focus is on the Nasdaq 100. The primary pivot is 24,150. Right now, this is the only number that matters. Okay, here is the plan. It's simple. Above 24,150, you maintain a long bias. Below 24,150, you initiate your hedges. Now, if the 10-year yield spikes past 4.35%, you stand down. Cash becomes your position. And here's the kill switch. A sustained break of the 23,800 support level confirms the structural decline is expanding globally. You invalidate the plan. All right, final check before execution. Before you act, you check the pre-market volume on Nvidia and Micron. If that volume confirms the move at our 24,150 pivot, this signal is real. If the volume and price are telling you two different stories, it's a trap. Do not engage. So, is this a contained fire or is it a wildfire about to spread? The answer lies at 24,150. That level at the US Open will tell us if this Asian deleveraging is a contained event or the start of a new global trend. We'll know the answer at 0630 EST.
No exceptions. If you want the Asia close before New York opens, you need to be here. Subscribe.